Hello, everyone. In this small session, we're going to discuss about the flow of capital call because venture capital and private equity, the fund managers sign the commitment with the investors, and once the commitment is signed, then fund manager basically reach out to the investors to uh, transfer committed amount or portion of committed amount. So that committed amount, you can call it as a capital call. For example, let's take example, hypothetical example. The capital call, sorry, commitment was signed for the amount, let's say, uh, 10 lakhs. As per the a small example, let's say 10 lakhs or 1 million in English, to understand this 1 million. But now the investors ready to only contribute, let's say, 1 lakh USD at the moment. So that 1 lakh USD, you can call it as a capital call. Capital call. All right. So I hope now you got this. So commitment was signed. It means it's a legal paper which allow investors to commit, anyone or anyone. It means anyone, so that they can offer funding up to that limit. All right. It's like a credit card, I would say. In a credit card, what happened? Bank issue credit card to the borrower, and borrower utilize that amount as per the credit limit given by the bank. So same way, in a private equity, commitment, it's like a credit card for the fund manager. So fund manager can access the that commitment facility as and when required. Fund manager can issue the capital call in case of investment opportunities, expenses, operating expenses, deal expenses, partnership expenses, or I would say, in terms of anything, if the fund manager want to issue the capital call, then fund manager can do it. So the capital call is a very critical process in private equity as well as in a venture capital business or funds, I would say. So let's understand, the capital call flow. When the capital call issued, what happened? There could be two situations where is capital call due. If the answer is no, right? If the capital call is due, if the answer is no, then report to receivable. And if capital call is due, so first understand this capital call receivable. So it means if you see the date where the capital call was due, and now you're doing accounting. So in terms of that, your accounting entry, it should be capital call receivable account debit to capital call receivable account. Sorry, capital call receivable account debit to capital call account credit. So XX, it means any amount. Let's say as per this example, you can just edit like capital call receivable amount 1 lakh USD to capital account credit 1 lakh. So here little bit change which you would see, no entry required. If the capital call is no due, then report to receivable, it means no entry required. All right, no entry required. Then the next one is, see, the due capital. When the due capital settled in a bank, when due capital settled in a bank, then what happened? So as an accountant, again, you'll have to record that entry in the books of fund, correct? Venture capital books or private equity or SPV book will have to update the entry, or will have to update the journal entry in the books of fund, correct? So in that case, when the due capital, see guys, when the due capital settled in the bank account at that time, so the accounting entry would be cash received on a bank account debit to capital call due account credit, because due you will have to reverse it out. So this due and the first due entry which you have received, so basically debit versus credit, it will remove from the books. So net your accounting entry would be cash received on bank account debit to uh, capital call account credit. How it looks like that entry, see this. uh, this entry would be your the actual main entry where cash account debit to capital call account credit, right? And so this entry basically debit versus your credit, so this will remove from the your accounts. Debit is equal to credit, it means if that will offset basically, right? So this is how your accounting works, and that logic we actually set up in the accounting systems as well. And finally, in terms of impact, asset side cash balance will increase and liability side capital of a partners will increase. So it means capital will increase basically. So this is how your capital, you know call flow looks like. So it's a very critical one, so you should understand this one. So all right. So if you understood this, then I would say, click on link, that button, and share this with others as well. So I'm done with this small session. And if you want to understand the flow of distributions, how the waterfall calculation works in, let's say, venture capitals and private equity, SPUs, real estate, then comment real estate or comment, let's say, venture capital, or I would say just comment waterfall. So I'll record another session for distributions as well. So if you like this, then don't forget to comment and share this with your friends. And one more thing, we have designed course for private equity, hedge fund, venture capital, and real estate fund funds. If you're really interested, then you can enroll. I'll provide link in the description. So thank you very much for watching this. We'll see you next session. Thank you.